Chapter 12 Top Tips for Investing in Cryptocurrencies. If there is one thing that cannot be overlooked as regards to trading, it is that you should come to terms with it and embrace the fact that you will never be able to perfectly time your purchase and selling. Seriously, what is your chance of buying when the price is at a true bottom and then selling when it's at its exact peak? Applied to this, the need to bring enough money into business to make any sort of dent in your wealth, and as you can notice how hard it is. Trading is not cut and dry since there is no clear direction to take. When trading and investing, every trader has its own objectives and cryptocurrency is no different. If you've been engaged in trading, then you'll probably know what it's like to lose on a deal that didn't work as planned, or one that went fantastically but didn't give you the size of the position you desire. The best thing to do is to live in the moment and then think about the past. You can't change it anyway, so it's not a beautiful thing to look back at. Yeah, it would have been remarkable to have capitalized in Bitcoin when it was at a fraction of a cent, and then withdrawn when it had over $2,500. But that, unfortunately, just isn't how things work. Think of it the other way around. When the price is $600, you don't buy into Bitcoin and then fall to $100. You're panicking and selling out. It would be really frustrating. There is nothing to do about the past, and there's no way we can foresee the future. So it's all about learning from our mistakes and using that experience to move forward. Few top tips for those new to invest in cryptocurrencies are as follows. Understand just how strong cryptocurrency is. We prefer to look at this the same way we do investing in stocks, but cryptocurrencies are assets, not stocks. Yeah, they both have a price, but they are very different, with the sale being the only real connection. We already know that the Bitcoin-backed blockchain technology is being studied for the ability to transform retail and institutional resources, and the decentralized nature of cryptocurrencies means there is no way to shut it down and no way to exploit it easily. If people question why you want to invest in cryptocurrencies like Bitcoin, you should tell them that it is the best investment that someone can make, and that you believe in the future. As long as Bitcoin money continues to grow, it will continue to realize its potential. Always have a plan. How much do you sell and buy? There are those who only want to be day traders, but it has already shown that holding might be your best bet. The rule of thumb is that the more you keep, the less chance there is, and that the rule also applies for investments in cryptocurrencies. Occasionally, however, cutting loose and getting out would be safer, and one of the measures for this is when unexpected systematic problems trigger price declines. Always ensure you have in place a plan that covers all eventualities. Start small. One way to reduce risk of unexpected shifts for Bitcoin and other cryptocurrencies is to compare the buying cost of the dollar. That removes the sting from abrupt price increases and reduces the reliance on a single entry point. You cut down on the need to buy and sell too much by rising your investment over time. Cryptocurrencies are here to stay, and there's no need to go all out and fill the coffers right away. Unless, of course, rates go down to an all-time low. Hedging your bets. Most exchanges are willing to allow you to place short orders on either side of the price movements. For example, you might go 10% short and 90% long, which would mean that you have far more long-term trust. This form of approach will account for all levels of risk. Trading in Altcoin. Never underestimate the influence of Altcoin. Bitcoin isn't the world's only cryptocurrency, and the altcoins aren't so susceptible to public speculation. They have much smaller market caps and are more vulnerable to bigger price swings. But each has its own objective and goal. The risks of investing in altcoins are higher, but often the rewards can be much higher. Others are more secure, such as Ethereum, while others are at a higher risk of fluctuation. So assign your percentages per your own risk tolerance. For instance, you could put 50% into Bitcoin, 30% into Ethereum, 50% into Dash, and 5% into Zcash. There are lots of guidelines and tips for investing, but generally, when it comes to cryptocurrencies, you can get away from following the same guidelines as with other investments. In our last chapter, we will look at some of the jargon that you may face when you deal with Ethereum, the blockchain, and other cryptocurrencies in a short time.